Assalamualaikum and a very good day. I back to Madam Bushra binti Muhammad Zaki. Today, me and my group members are going to present our analysis on Dutch Lady Milk Industries Berhad and Farm Fresh Berhad's financial performance.
Thank you, I'm Nadhirah. Let me start with the question, why we choose these two companies? Firstly, both companies have strong brand recognition in Malaysia because many consumers purchase milk and dairy products from them. Second, they are a good competitor in producing milk to consumers. And third is they have excellent achievements in the milk industry. Dutch Lady is a dairy company based in Malaysia and a subsidiary of Friesland Campina. They do the business in manufacturing and distributing dairy products and fruit juice strains. Farm Fresh Berhad is a vertically integrated dairy group involved in the business of farming, manufacturing and distributing dairy and plant-based products such as soy milk at their processing facilities in Johor and Pahang. Dutch Lady Company sells yogurt, liquid meat in various packaging types, and specialty powders for babies and developing kids. Next, Farm Fresh Berhad produces fresh milk that is milk from happy cows that are being taken care of in a serene farm with the greenest pasture. They also offer farmers technical guidance to raise the quantity and quality of milk. Lastly, Farm Fresh Berhad help micro entrepreneurs to start business with them as agents and stockists. Dutch Lady Company's strength is they have become number one of milk industries in Malaysia as they have over 50 years experience and they have a new manufacturer to increase their production level using Industry 4.0 technology. Their weaknesses are they cannot raise their products prices because consumers come from lower level income and the high cost of replacing existing experts increased from 340 million to 540 million. Next, Farm Fresh Berhad's strength is they own 5 dairy farms in Malaysia and 1 in Australia. Second, they open a franchise business, launch a milk tea brand called Jomcha. For the weaknesses, they required a lot of money to import cows from Australia to be processed in Malaysia, and their texture of milk is easy to spoil before the expiration date. That's all from me. I will pass to the next presenter, Nur Amirah.
Thank you, AZLIATUL ASNIE. For trend analysis, we choose Dutch Lady Milk Industries Berhad for our main company that we analyze and interpret from 2017 until 2021, and will we discuss the highest and the lowest number of 4 types of ratio. First, liquidity ratio. For the car ratio in 2020, it showed that the car ratio was 0.89 times. Meanwhile, in 2021, showed a highest car ratio of 1.58 times. The highest the car ratio, the better or more liquid the company is. Because of that, Dutch Lady Milk Industries Berhad in 2021 has a stronger ability to pay its short-term obligation than year before compared to 2020. Next, the quick ratio showed the lower quick ratio of 0.42 times in 2020. However, in 2021 showed a highest number which is 0.63 times. The highest the quick ratio, the better or more liquid the company is. Because of that, Dutch Lady Milk Industries Berhad in 2021 has the ability to pay short-term obligation without relying on the least liquid asset compared to 2020. Secondly, activity ratio. For inventory turnover in 2017 showed a highest number at 5.80 times, but in 2021 it dropped to the lowest number which is 4.70 times. It showed that the most efficient year was 2017 because the company was able to sell the goods quickly and meet the demand compared to 2021. The highest the inventory turnover rate, the better it is for the company. Next, for total asset turnover in 2018 showed the highest number which is 2.63 times. However, in 2021 showed the lowest number 1.89 times. It showed that the most efficient year was 2018 because of the company efficiency in using all the resource or asset to generate sale compared to 2021. The highest total asset turnover, the better and more effective the company is. That's all for me. I will pass to the next presenter, SITI KHALIJAH.
Thank you, Nur Amirah. Aforementioned, there are 4 types of ratios, and Amirah has mentioned 2 types of ratios for Dutch Lady's trend analysis, which left us with the other 2 types of ratios to be discussed with. The third type of ratios is leverage ratios. In 2018, Dutch Lady's debt ratio increased to 3.84%. However, the number has drastically declined to 1.83% for the year 2021. This indicates that the company used a higher level of debt to finance its business in 2018. Yet, in 2021, Dutch Lady Company has a high ability to pay for financial obligations. This means that the lower the debt ratio, the better and less risky for the company. For debt to equity ratio, in 2017, the company was able to make enough money to pay the debt and the shareholder experienced a low risk during that time. Nevertheless, the company had to suffer a high debt equity in 2018 and 2020. The company obtained 0.14% for both years, that being a high risk for the company. This shows that the lower the debt equity ratio, the better and less risky for the shareholder, investors as well as the company itself. Last but not least, we will discuss the last type of ratio for trend analysis, which is profitability ratios. For return on assets, in 2020, the company is incapable in utilizing their assets to generate profit as it only obtained 15.57%. In 2021, Dutch Lady managed to achieve a higher number of return on assets at 41.33% and was able to generate the net profits. It indicates that the higher the return on assets number, the better it is for the company to earn more money. In 2018, the company outstandingly attained the highest number of return on equity, which is at 123.60%. Even so, 2020 marked the lowest number the company has attained at 47.18%. The higher the return on equity, the better the company utilizes their firm's equity and investors get good returns on their investments. That's it from me. I will pass to the next presenter, Nadhirah.
Thank you, Siti KHALIJAH. Next is the cross-sectional analysis between Dutch Lady Milk Industries Berhad and Farm Fresh Berhad for the year 2021. So, what are the ratio differences between the two companies? Which companies show the best performance? Therefore, I will compare 4 different ratio types at the same point in time for the two companies. Firstly is the liquidity ratio. For current ratio in 2021, Dutch Lady Milk Industries Berhad showed a satisfactory current ratio at 1.58 times, contrary to Farm Fresh Berhad, which its current ratio is lower than Dutch Lady at 0.79 times. This indicates that the Dutch Lady company is more capable of paying its short-term obligations within 1 year. Next is the quick ratio. It shows that Dutch Lady Milk Industries Berhad, which is at 0.63 times, meanwhile Farm Fresh Berhad is only at 0.37 times. Dutch Lady evidently had the higher quick ratio, which indicates that the company has enough liquid assets to meet its short-term obligations, and it also helps its financial health positively. However, as for Farm Fresh company, it indicates that the company lacks the ability to satisfy its short-term obligations. We will move to the next ratio, which is activity ratios. Dutch Lady's inventory turnover seems to be less effective with its ratio at only 4.70 times, in contrast to Farm Fresh ratio, which is at 4.82 times. Although the difference between these two within a close range of 0.12 times, yet it determines that Farm Fresh inventory turnover is more effective than Dutch Lady, which allows the company to generate more sales. Farm Fresh may have efficiently managed its inventory turnover in such a way that the company neither ran out of its goods nor had a surplus of unsold goods that took up storage space. This implies that Farm Fresh Berhad manages its assets more efficiently. Moreover, for total asset turnover, Dutch Lady company is more efficient at generating revenue using all its resources, as its ratio is 1.89 times higher than Farm Fresh company, which is 0.95 times. With the low ratio, assumingly Farm Fresh is incapable of using all its resources efficiently, or the company may have internal problems that prevent the company to achieve a high revenue. Last but not least is leverage ratios. Farm Fresh Berhad has a greater debt ratio than Dutch Lady Milk Industries Berhad. Farm Fresh Berhad's debt ratio for 2021 is 2.65%, meanwhile Dutch Lady Milk Industries Berhad's debt ratio is 1.83%. This shows that Farm Fresh Berhad is riskier than Dutch Lady Milk Industries Berhad due to its greater debt ratio. In addition, Farm Fresh Berhad has a greater debt-to-equity ratio than Dutch Lady Milk Industries Berhad with 0.46% against 0.04% for Dutch Lady Milk Industries Berhad. If it is excessively high, it will put the creditors or companies at risk. It indicates that Dutch Lady Milk Industries Berhad used debt financing more than equity financing to finance its assets and activities. Finally is profitability ratios. Dutch Lady Milk Industries Berhad's ability in generating profits from the company's investment in assets was recorded as 41.33% greater than Farm Fresh Berhad with 7.00% return on assets for the year of 2021, which is a huge percentage gap. It shows how Dutch Lady Milk Industries Berhad has been effective in generating their profits with profitably handled assets compared to Farm Fresh Berhad. Dutch Lady Milk Industries Berhad also indicates a 90.32% higher percentage in return on equity compared to Farm Fresh Berhad, which only shows 17.09% for the year of 2021. This proves that Dutch Lady Milk Industries Berhad is good in generating their profits efficiently and increasing high return earned on the common stockholders' value in the firm compared to Farm Fresh Berhad. This indicates that the Dutch Lady company has a better return to assure the company's growth potential. That's all from me. I will pass to the next presenter, AFIQAH.
Thank you, Nadhirah. As for my part, I will be talking about the overall performance of Dutch Lady and Farm Fresh, and we will also look into the recommendations. For overall performance, we divided it into 4 parts of ratios. The first one is liquidity ratio. It shows that Dutch Lady's ratio from 2021 is the highest, which means in that year they own higher current assets and low current liabilities. Next is activity ratios. Dutch Lady have a better ratio in 2017 to 2018, and this shows that they have lower inventory with high cost of goods sold. For leverage ratio and profitability ratios, 2021 was the year that they managed to generate profit and control their debt effectively. If we compare with our fresh performance, Dash Lady's performance is way better than the other company. Briefly, we can say that 3 ratios out of 4, which is liquidity ratios, leverage ratios, and profitability ratios, shows that Dash Lady is capable of managing their company's reputation well. Dash Lady really shows that they are capable of managing their debt and earn more profit than Farmfresh. There are ways that any company can improve their financial ratios, such as improving their company marketing. By this, I mean that the company should promote their products using any modern platform such as Twitter, Instagram, or Facebook to attract more customers into buying their products. Other than that, they should also consider lowering the product's prices. This is a good way to boost up their sales as people are attracted to lower price products. These ways indirectly bring more customers and the company shall make higher profit from time to time. It is important to calculate all the ratios because it helps the manager to monitor the progress of the company. Other than that, it is also used for investors to make a decision before they invest into the company. Next, the creditors also use the ratios to check the company's transaction before they approve any loan. Last but not least, these ratios really determine the strength of the companies financially. In the future, we really expect the Dash Lady to improve their finances and increase their sales so that they can double up their profit. Other than that, they also have to manage their debt and inventory wisely if they want to survive in this kind of industry. Last but not least, we really hope that they continue to strive successfully in the business industry. That's all from us. Thank you.